Let's go right to the story here. What are the two things that you are looking to see before you'd start nibbling at technology?
So the first thing, Tyler, is I want to get through the quarterly earnings period. Usually I don't care so much about these because I'm pretty firm in my long-term beliefs about companies. But the last thing I want to do is be the guy that buys Netflix or Facebook, even for a long-term investment, before it goes down on its quarterly earnings 20 to 30%. Just a suicide mission. And so there are a couple of major tech companies to come, like Nvidia. At least these days, the king in semiconductors doesn't report until February 16th. So that's one item. The other item is I'd like to see some sort of stabilization in short-term rates. Now, I'm not saying that the Fed has to have all of its rate hikes past us before I act, because I think that would be too late. And you'd miss a nice snapback rally in tech and aggressive growth stocks. But I do want to have at least a better sense. And of course, that sense will be the only thing I can expect as to how many rate hikes we'll have this year and how quickly are they going to raise rates. How many hikes, and are they 25 to 50 basis point hikes? Once we get the final strategist from the sell side out there saying there's going to be a ridiculous number like 5, 6, 7, and we're going to have several of those hikes 50 basis points or more, then I know the worst case assumption is baked into stock prices, and then it's safe to go back into tech.
So it's really the moment at which the monetary assumptions translate into stock prices, get cooked in there.
That's right, because what you want to do is have the most bearish strategist on one of these marquee Wall Street firms say it's going to be 7 or 8 hikes, and there are going to be several, Tyler, that are 50 basis points. You mark that line in the sand. The news is out there. That scenario is baked into stock prices, and then I'm comfortable.
So how about some companies that you are comfortable with owning right now? Maybe these are companies where you think the business is just sort of a bulwark business. They've come out with their earnings, so there can't be a big surprise for the quarter. Are there customers that fit that bill?
There really are. And among the FANGs, which everybody likes to focus on, I think Apple, Microsoft, and Alphabet were clean. I think that Amazon, despite the fact that it was perceived positively and the stock went up to 14% the next day after reported, there actually are some things I still worry about there. And of course, Netflix and Meta are in the poundy box, and they will be for some time. So I like those. I also, Tyler, like various semiconductor and semiconductor capital equipment companies, but they need to report first to confirm my intentions. And the next one I'm looking for is Nvidia. That is on February 16th. But so far, I very much liked AMD and Qualcomm.